Yo, what up? This is Justin McKissick, Larry, doing analysis for you. This is the same stuff you learn with the TradeMo.co trading strategy. So moving averages, from my experience of using them, all moving averages do is follow the direction of the price, based on the parameter, based on the speed of the actual parameter. Okay. So we don't have to be doing any really type of predicting unless we're on like a higher time frame like we're on right now. But I teach you how to react. So this time frame we're trading on is a monthly time frame, okay? The monthly time frame, as you know, it takes 30 days for a new candlestick to form and for the current candlestick to end. The most important candlestick that we have to focus on, bro, is the candlestick all the way to the right. Okay, the most important candlestick is what's going on with the right because the right candlestick indicate what's going on right now. It's all about the now. Okay, and that's what price action is doing right now because that's what price action is doing. Everything to the left, everything to the left of this candlestick is the past. So it's good that these candlesticks are here because with the moving averages, the pattern is easy to follow. We see that in the past, in January 2022, right here at the bottom, when this blue moving average was over this orange moving average, price was going up. When the blue was under the orange moving average, price was going down. When it was over, I don't know about all that, price went up, price go down, okay? So if it always does that type of pattern, if it always do that type of pattern, it's safe to say it's going to repeat itself in the future, right? So it make more sense to follow the direction of the patterns because the patterns never lied in the past. But we want to get in at the sweet spot. So remember, again, we on the 1 minute, we on the 5 minute time. No, sorry, the monthly time frame. So let's break down the time increments. So before we break it down, let's look at these moving averages, what these moving averages are doing. Now we see that, like I've said, when the blue is under, the orange price go down, right? But look what the moving average is doing now at the end. You see how it went down? Hold on. It went down like this, right? Then it started kinking down like this, right? Now it's doing like this. So when moving averages make these movements like that, it's usually telling us something now. So based on how that moving average was starting to go down and it flipped down, now it's going back up, it's safe to say that the price was going up. And we see that that was going on based on this candlestick. So as we go to a smaller time frame, you'll see that price was going up. So let me go to a smaller time frame. Boom. Just like we said, or just like I said, price has been going up because we saw price was going up since for the last month because that monthly time frame showed price was going up. And because 4 weeks make a month, or whatever you want to say, that's what we've been seeing. And also, we know that's why that candlestick was flipping up like we saw. So now for the week, we see that the price is going up, right? So we see the price is going up right now. But let's also notice we got other moving averages on the screen. Okay. We have this moving average, this purple moving average, and this this green moving average. This purple moving average is faster than the orange moving average. So every time when the price is actually going a whole different direction as far as like following these candlesticks and moving averages, this candlestick, the purple moving average is going to respond quicker than the actual green moving average. Okay. So in my course, I teach people how when moving averages are coming to an end trend, just like when this blue moving average right here is at the end, it seems like a trend is coming, they start to come narrow. And they always do that. They get narrow towards the end. They start to narrow out, look, narrow. And then when the trend begins, they cross over and start getting wider and they stay wide and keep going wider. Things like that I teach in my course. So right now we see, look, by the weekly time frame, it's narrowing out and the blue moving average is attempting to go up over, right? That's what we see, right? So let's break it down to a higher time frame. And also, we see this moving average was going down. Look, it's starting to go up a little, right? So if we go to a smaller time frame, we're going to see either this purple moving average going up, and this green one going up, and we're going to also see more candlesticks. We're going to see the blue over the yellow because it's already went up on a smaller time increment. So we're going to see that. Didn't I say that? Look, it did exactly what I said it was going to do. But now what we seeing something different. But this is why you use moving averages until it's exhausted. Okay. So the purple line on a smaller time frame is underneath the green, meaning there's a downtrend right now. But we saying based on the high time frame, the price is gonna go up. So this is the sweet spot to get in. So you see how this now we looking at this candlestick, the orange one. It's the current candlestick. The price been going down for the day, but the moving average is over the yellow, right? So it's retracing. So, and also I see the purple line going up and this green line going up. If those two lines start to narrow towards each other, that means that the price is probably going to start going back up like we see already. So what you would want to do is to enter this price on a smaller time frame when it's going up as a buy at the perfect time at the retrace. So let's break it down again to a smaller time increment. Okay. And that's what we see going on for the last few hours. Price has been going down, but we still see this purple moving averages over the green. So that's again telling us price is going to go up. So if I was to enter this trade, I would enter this trade when I see this blue moving average starting to get narrow or cross over the yellow moving average when it's hitting back up to go up. Okay. So like if you was to get in this trade based on the pattern, based on what I see, price is going to go up and you want to enter when when the blue moving average is starting to get narrow with the yellow moving average. Okay, the faster moving average with the yellow moving average. So let's go to a smaller time frame again. And okay, so that's look like what's going on. And also something else to notice, when you look at where price always goes down, moving averages could also be used as support and resistance. Because if we notice, price always goes towards by the moving averages. Like, look, you see when it come back down, like by the moving averages, by the moving averages. So it's also safe to say that price is going, price is always reversing there or consolidating in that area. You know what I mean? So around this area, we see what's going on. When we see this start to narrow around, right here, this blue moving average, the being that we know price is going up predominantly, today, matter of fact, I'm gonna get in this trade. I will put a stop loss here. I will wait until it actually come up, or I'll put my auto trader on and take the trade, and then keep that trade open since we see it trending up. This is when I would enter the trade. You know what I mean? Or you could get in smaller time frame just to enter a lot better. But you don't got to do that for real. You could put the auto trader on. So when you put the auto trader on, it's automatically gonna trade based on the algorithm when the blue go up over the yellow moving average and one candlestick form. When one candlestick form, then you got a new trend. Okay, so that would be a good trade to get in because it's off the resistance or the support, whatever like that. But I'm just going off the patterns. See what I'm saying? So that's how I do my analysis. But if I was to trade this, like just going a smaller time frame, I would go down to the 5 minute time frame, like the day traded. You can. This is what we call swing trading from higher time frames. Like you like to trade from higher time frames and stuff like that. So based on the fact that like how you like to trade, let's go back to the daily time frame. I would wait for this to retrace and go back down and wait by maybe even the 4 hour to like go back up because you see it's going down right now. So you probably want to wait by the hour or the 4 hour to re-enter. But then when you actually see that 4 hour go up over it, then take that trade as a buy. Because remember, all moving averages say different things, but the closer the moving averages are to the price, that means they're faster. You know what I mean? And the farther they are, that means they're slower. So this blue moving average is the fastest. The yellow is the second fastest. Purple, the fourth fastest. Green is the fourth fastest. But, you know, in speeds like that. Okay. So, yeah, moving averages tell the story because it's following the price based on different speeds. Okay. And the quicker the moving average, the quicker the price reaction. So right now on the 4 hour time frame, I see something else going on because I know what moving averages do. I would keep this trade open until the moving averages just cross. I wouldn't even try to predict it. Just leave it open until it do something else because moving averages follow the price. It don't get much simpler than that. And that's what it's been doing. Go down to the hour again. So let's look at the 30 minutes, see what's going on. See, Look at that. Now look, price going down, down. Now right up in here, it's making a slight little curve a little bit. I see the curve coming. And that's what also we see. You remember that moving average purple responds slower, right? But look at the blue moving average doing that too. It's start like a curve coming on. So this could be that reversal I'm talking about. This could be the reversal I'm talking about. So I would be watching about an hour. I would watch it by the hour, and I would enter this by the hour. So what I would do would go to my, my alert system. I would turn on an auto trader for this pair, and when the blue go up over the yellow, it would take the trade, and I would leave that trade open. You know what I mean? Then if you want to go up to the higher time frame and see if it's reacting to this thing, you can see what it's doing because it's all saying the same thing, just at different time increments. And that's my analysis for the JPY, USDJPY. I hope that make a lot of sense.